Hi, Nick. In today's episode, we are trying to find clues into the next target. Where are we heading? Just before we do so, quick word from our sponsor. Hello, and welcome back to the Academy. So, in this episode, clearly an awful lot going on at the moment with Liberation Day or whatever name you want to call it. A lot of noise going on out there, a lot of movements in the markets. And today we're going to look for clues. Nick's going to try and come up with some clues, we hope, in terms of where we're heading next, any target zones, if we're going to pause, where we're going to pause. So, Nick, it's over to you.
Frightening.
Hmm.
Our friend Torsten did a video yesterday in German, I'm afraid, how to catch a falling knife. Now, that's a good question. What do you do in a market that continues to go down? So we're going to start with the videos from November on, where we said we could be coming up to a top, and we think that the target would be around 5,200. We're pretty close to that today. Now,
Mhm.
where did this number come from? Did I just make it up? What have we got? This is the S&P since, well, what's that? This is just July 24 to today, or yesterday, I should say. And what you can see on this thing is three boxes: a purple box, a kind of an orangey box, and a blue box. And those are what I would call the targets. But where did I come up with the 5,200? That predominantly was driven by one of these boxes, and I'll explain that. That was this box here, the very first box, the purple box. The purple
Mhm.
box is quite wide, right? So, and the reason that it's wide is because it's meant to represent. So when you come to a significant high, so this was, I've called it three in purple with a circle, and below that is five in brackets. So when you come to a significant top, what one of the sort of guidelines is for where the end of wave four will be. So that was three in purple going to four in purple. Where would wave four end? And the guideline is back to the previous fourth wave of one lesser degree. And the one lesser degree, so the degree we're talking about for it's purple, and the one lesser degree is the green color. So where was wave four of the one lesser degree? It was between that high here, where I've called it three with a bracket. You can see that on the left,
Yeah, I can see that.
down to this four in a bracket here. And that's why it's sort of fairly wide. And generally, the rule of thumb is that you will head down towards the low end of the previous fourth wave. That's why I said 5,200, and it really did look stupid because we went up to 6,000. You know, I think we were 5.8 or something like this. We went to 6,000, 6,100, and now we came tumbling down. Did I expect some sharp correction like this? No, of course I didn't. But
I don't
I
think
actually
anyone
thought it'd be a
did.
long
I,
drawn. Sorry.
I say I don't think anyone did. It's a bit of
No,
a
that's right. I thought it'd be a long drawn out correction, but you know, maybe I should have done more homework on where that thing, the shape of that thing. We may have time to look at that, but broadly, so target one is this previous fourth wave here, which I can probably show it in a better color, and that's this purple thing here.
got it.
The other target for a wave four, if this is indeed a wave four, so we still don't know, maybe this is a wave one or a wave five or something else, but let's, you know, sort of entertain me here. Let's just say it's a wave four. Where do wave fours otherwise correct? And generally, wave fours correct between 23.6% and 38.2% of the previous wave three. And that 23.6 to the 38.2 is in this orangey box. And that is sort of somewhere down. So we can just show that. That is somewhere down here. So I'm drawing another line on the left here,
Got it.
another
Yeah.
red line. And then, of course, there's another way to try and find where that end of sequence might be, depending on how well you've done your counting. So I've always said, so corrections are in, let's just say, three waves: A, and then we saw B. I thought B would be much higher. I thought I would get to like 5.8, 5.9. We're almost there, but and then I said, Lynn, we're going to have a look. Um, and then we're going to do a wave C. So we're doing A and a B and a C. And where would wave C finish? If I know where A is and I know where B finished, then wave C finishes between 100% of the length of wave A, which will be at this level here. You see that's that level there on the top of the blue,
Yep.
down to 1.618 of A. That's that level here. So if I sort of, bring that box down, size of this thing over here, and then we can sort of put all three things together. Have I drawn that properly? A little bit lower. So it's probably around here. So you've got some overlap. Let's sort of have a look at where is that overlap. And that overlap is between 5,122 to 5,179. Now,
Hmm.
it doesn't necessarily have to go into that box, doesn't need to stop into this box, doesn't need to stop into that box, doesn't need to stop into that box. However, in my view, if we break much below that low end of the blue, then we're in a different sequence, because what I'm assuming here in this sort of world that we're in, that we are correcting. I'll probably have to put up a weekly chart so you can see it. Weekly. So this whole story of what happened since this low, October 2022, right to this high, recently, this 6,100 high, this wave 4, as far as I'm concerned, is correcting that movement, but I'm calling that movement just wave 3. Now,
Right.
it is possible that we're correcting something much bigger. And that's the thing we need to watch out for, because, then you start to look for, well, if that thing has a different label, you see, I've got wave 5 here looking for a final higher, above 6,500 or thereabouts. And if, let's just say, sort of we reach the top and that was actually wave 5, well, then this would be wave 4. And that wave 4 spans from 4,800 down to 3,900. And then that becomes the target. So first things first, one thing at a time. We're not going to get too sort of bearish, even though the market is really bearish. These are the three boxes. These are the three targets. That's how I would calculate the kind of target level for this thing. And, we spoke a little bit about blood indicator last time. And, for now, and it may well change, for now, the credit spreads, they're either lagging or they're just sort of chugging along, but they're not leading this move down. And this move down, for me, from a kind of more macro perspective, is basically saying, okay, you started the year with an equity risk premium, let's just say, of 4%. So you wanted to earn 4% more than treasury bonds, risk-free bonds, for the next number of years. So you're pricing that kind of risk level, but there's a new sheriff in town who has introduced some uncertainty. He's changed the policies around from Biden 180 degrees, and probably from former presidents as well. And in doing so, he's added more uncertainty. So we move the risk premium for equity from, we were, let's just say, 4 and a bit, or 4, let's just say closer to 5. And that sort of changes the multiples. So instead of having a, multiple 25 times PE, maybe we're going to go down to 18 PE or something like this. And that's okay. That's a repricing of the equity risk premium. It doesn't necessarily mean that, because of the uncertainty, but it doesn't necessarily mean that either we go into a recession or anything like that. I think the credit market is based on all market wants to go down, we'll go down with it. But only when you start to see credit spreads widening, then and leading the move as opposed to following the move. I think that's where you'd probably say, until that thing happens, this is just a repricing of equity risk. But if something else were to take place, then you'd say, okay, well, now we're sort of looking at recession. Now we're looking at earnings, forecasted earnings, and that's a different repricing. So for now, first set of targets, blue, orangey, and pink, and then we'll see.
Yeah. Okay. I mean, it's still completely up in the air. We saw the tariff calculations causing much confusion just in the way that they were obviously done. Very crazy. I mean, there's been enough talk about it. We're not going to go into that all over again. But just looking at these things, people are confused, and you're seeing this in the price action. So, we're already going to be looking at the futures right now on the S&P. We're going to be opening up towards that level, 5,200. Um, you know, it's something you've been talking about for an awful long time. We're still searching for clues, still searching, still looking for other targets, perhaps. Still waiting, as we always say, for the dust to settle. So no doubt we'll be back again very, very soon with perhaps a little bit more of a clearer vision, but who knows? Anything else to add, Nick?
When you take 1,000 points off the S&P in a month, I mean that's pretty stemmy, I have to say. And you know, I'm sure that even though the uh, the administration are very, I should say, nonchalant about, yeah, but it'll be fine. Um, why trust me, bro. It'll be fine. I don't think that they can carry on saying it'll be fine. They do need to make sure that how should we say, the investor community is not fearing investing either in America or anywhere else in the world, because what these guys need to remember is that every decline in the S&P hits their tax revenue. So you can save as much money as you want in Doge. You can save a $500 billion in Doge. You can say defense spending I cut by another 500 billion. I saved $1 trillion. And then you look to the right and you say, well, how much did we receive tax revenue this year? And then somebody says, well, $1 trillion less than you think because the market went down. And then I said, well, hang on a minute. I tried to save money over here. What do you mean that we're not getting? And that's a really important thing, that they can't be nonchalant about it. They must take care to secure their tax revenue through the process of transition. I've said it before. Whenever a government member says, "Oh, we're transitioning to," and I don't care whether it's energy or this or that, what is your transition plan? And how can we do that in a way that you don't break stuff? And so far, when governments try to transition, they tend to break stuff, and that's where we're at right now. They're breaking stuff.
Yeah, I mean, we've had conversations like this, obviously not recorded conversations, but we've been talking about how this whole thing's been communicated. And, we have our thoughts on that, and we don't want to get too political here, but, I think things could have been communicated in a slightly different order, which possibly would have alleviated a lot of this kind of, volatility. But it wasn't done that way. Trump did talk at the end of his speech, obviously on, talking about tax cuts, etc. But I don't know. We've still got a way to wait for all of those things to sort of come through, and who knows where we're going to be by then. I do want to come back, incidentally, on the blood indicator on another recording because I'm sure we can perhaps mine that a little bit deeper for clues again of direction. So far, as you've already mentioned, the credit market isn't giving us that kind of warning signal. It's unusual for it to be behind the curve, if you will. So, who knows? Maybe it's something going to catch up and will catch us all surprised
Well,
by
as I
surprise.
say, I mean, this is, when you've got foreign investors as well who are looking at their relationship with America, and and they need to fix their own space. So if you look at the Germans right now, they need to spend some money on defense, on growing their own economy, and they're going to borrow some money. Well, if they're going to borrow some money, where are they going to borrow it from? They're going to look to their own investor community, sort of local first. And they're going to say, guys, we've got some lovely things for you to put your money in. And they're going to try and entice these people out of their investments. And they're going to say, right, where are you invested in today? And the investor community would say, well, we own Apple, we own Nvidia, we own MSCI World. And then they're going to say, right, sell all of that stuff. And it's the same with the Japanese. The Japanese have bond yields, which are sort of, I would say they're probably pinching them a little bit because, the Bank of Japan owns so much debt. So, and who are the big investors in America as well? It's the Asian community. So a lot of these guys are going to be saying, we talked about the repatriation as well last year in August when we had that carry trade thing. And it was all about repatriation. Where is the money needed? And the money is needed in Japan. And, the Brits have said it as well. They've said to their pension funds, we want to know how much of your investments are in the UK economy. So it's every man for himself.
Mhm.
And whilst every man for himself and everyone's piling their money out of this stuff, the Americans can't just say, well, it should be okay. I don't think that works. And I think they need to do a little bit better than that in order to convince people either not to sell or at least to slow down the selling so it's manageable. Because what you don't want is chaos in the markets because what are they going to do? Just shut it down? Can't trade today.
Yeah, yeah. I'm hoping, I mean, it certainly points to some eyes being taken off the ball, so to speak. I'm hoping really it isn't too much of that because then God help us. Bitcoin's still hanging in there, still hanging in there. It's doing relatively well. So we should have another recording on that soon as well because, still seeing how that pans out. But it seems to be, in comparison, sort of, as I say, holding in. So worthy of a further conversation, I think. Um,
Indeed. But
still,
remember, I mean, the story isn't Bitcoin. The story is
yeah,
foreigners selling, their stuff and repricing of the multiple. But when people are losing money on portfolios, they will look at the stuff they've got and say, well, what have I got with profits? And they'll say, oh, I've got some gold, so out will gold. So you will start to see some of these top performing fringe assets, let's just say, also experience some volatility here. I mean, nothing goes unscathed is the
no.
message.
And when eventually we do find this pause, you're going to see perhaps some of these better performers being used to fund some of the underperformers, and you could see, rotation out of that. So
Yeah, indeed,
that'll be
because I mean,
interesting.
there's going to be some rocket cheap stocks out
Yeah.
there, on a comparative basis. Yeah, I mean, you're going to see prices in things that you loved, all of those loved names where people were prepared to pay ridiculous multiples for, are going to see multiples that are substantially lower. And, if you liked it up there, you're going to love it down here
Well, you should do. You
when
should
you're
do.
ready. If you've got any money to
If you've got
invest,
anything
if
left,
you're not
yeah.
fully invested.
Exactly. Yeah. Good. Okay. A brief conversation there, searching for clues. We're still searching for clues and we will carry on searching for clues. And when we find some clues, we're going to come straight back and we'll give you an update. So thanks again, as always, Nick, and I'll talk to you soon.
Pleasure.
Take care. Thanks, everyone. Please like and subscribe as usual. Carry on listening to us, and hopefully we'll give you something to get your teeth into. Adios.